All right, all right. Let's go ahead and get into time-based liquidity. I'm going to do two of these. Okay, this one here is going to be focused on sessions and time. All right, sessions and time. So what I would be looking for here is, as you see, I have these indicators. I'm going to do a whole video on indicators. I have the Asia session here. I have the London session here, and I have those marked out. Here's the low of London, the high of London, low of Asia, the high of Asia. I have the midnight also. Okay, I mark out the midnight. This one's right in between, so I'm like, okay, so this is a zone. Okay, that's exactly what I would look at that for. All right. So from there, I have the New York 7:30 a.m. Let's add the AM on there. Okay, the AM open. Okay, I open on that candle. I just keep an eye on this, and what I use this for is for premium and discount purposes. All right. So let's go ahead and do this. Let's take the 7:30 open, which is right here. Okay, I'm gonna pull this down to the London low, roughly. Okay, I just pull it down, and let's do that. And this is gonna be considered a discount area, so I'm just gonna make it red. There we go. Oops, that's the text. My bad. There we go. Excellent. Okay, and then I'm gonna take this, and we're gonna clone it. And I'm just going to move it up here. I'm doing this in concept. Okay. You don't have to draw these boxes. This is just concept. All right. You don't need to draw these boxes like this. All right. I'm teaching right now. So I have a discount range down here below the 730, and I have a premium range up here. So up in the premium, I'm going to be looking at becoming a seller, and down in the discount, I'm going to look at becoming a buyer. Okay. So when I come into this New York session in the morning, okay, got my 7:30 open, I got the midnight, the highs and lows, and then I got this. Okay. Immediately, what do we start doing? We start pulling down. Okay. And we start moving down. What are we doing? Well, what have we learned? We're going to either a high or a low or an internal liquidity. So we're going to external liquidity or an internal liquidity. All right. So in this case, it looks like we're moving to an external liquidity. Now, remember that ICT himself said, wicks do the damage, bodies tell the story of the candles. Okay. So what do we have here? We have the London low in all three of these wicks. What do these candle bodies do? They come down, they blast through those. Okay. So they swept this liquidity down here. Okay. They also swept Asia low. All right. So now I would be looking to frame a actual long trade. All right, so let's go ahead and get after that long trade here. So we have that sweep of London, and we get this massive displacement right here. I would like that. And then now we're starting to look for, something during this macro. Potentially I could have dropped into a, super lower time frame here. But what I would have done here is actually I would have used this inverted fair value gap. Boom, boom, bam. Okay. Yes, inverted fair value gaps are aggressive. I am a little bit of an aggressive trader. Sometimes that pays off, sometimes it doesn't. But it's a part of my actual plan. Okay. I've run the numbers. I practice it. I use it. It doesn't mean it's going to work for everybody. Okay. But this works well for me. So I would have grabbed a long trade right there. So I would have went long, just somewhere in here, probably up here. Potentially I could have waited for it to push out of this range like this and then come back in, and I could have entered up here. All right. Now it really wouldn't have mattered either way. I just would have wanted to follow my rules no matter what. Okay. Now, because this stop loss is a little further away, I probably just would have went to the candle bodies right here, and then I would have targeted a 2-to-1. Okay, there we go. Bam. Okay, that's fantastic. Okay, I would have loved that. All right, and I potentially would have taken profit at these highs over here just to ensure. That's right there. Okay, that could have been a take profit, this white line right here. All right, and that is a 1-to-6. So potentially I would have left a runner to keep going, and 1-to-2. So my target would have been a little bit higher to finish off the 1-to-2. So just something like that. That's how I manage my trades. It gets a little complicated towards the end. I do start to use intuition and feeling out the market at this point. So just, bear that in mind. All right. Now, if I was to get right on this inverted fair value gap, right after we displaced and we started pushing up through this candle right here, then I would have just went ahead and taken the trade. Okay. That would have put my stop loss right about there. And my target would have been a little bit closer to start with. But same thing, right? I would have been looking to take profits at this high. That's actually exactly a 2-to-1 pretty much. And I maybe would have left some runners depending on how bullish I was feeling. Okay. But I definitely would have tried to follow my actual trade plan here for this trade. Okay. So that's an example of how I use a time-based liquidity to kind of frame out trades. Now, to discuss what I would have done if we did this invertedly. Here, I don't invert the chart much, but there we go. Let's just say London session high and low. Okay, 730 there. Okay, this is just the opposite scenario. We pump up, and now we're way up into this, premium range. We're above the 730. So now I'm looking for what? Now I'm looking for shorts. Okay, same exact thing. In this case, because the same candle is just inverted, here's a fair value gap that got inverted. Bam. Take that trade, run that bad boy down. Okay, and as long as we're continuing bearish order flow, you can hold this all the way down, until you get into these lows and even these lows. So that's just how that would work on an inverted scale. So just remember this 730, it's a nice little barometer. If we start pumping, right off the bat on the above the 730 open, you could potentially be looking for a time-based liquidity to be swept and for a reversal. Okay, doesn't always happen. But when it does, it starts to frame a nice little trade. So hopefully that was helpful on the time-based liquidity. I'm going to get into the next video for time-based liquidity.